I don't think investors understand how much the regulatory developments over the past 12 months are going to impact crypto markets over the next 12 years.
GM, good morning and welcome to the Milk Road Show, the daily crypto show that zooms out on the market and still finds alpha hiding in the margins. I'm your host, LG Doucette. Today is November 5th, 2025. The market has been chopping hard, showing little green candles today, but they are minuscule compared to the last couple days of red. And many are calling this the end of the cycle. But the smartest people I know are calling it just the beginning of great things to come. And lucky for us, I've invited them all on the show today. I've got Matt Hougan and Ryan Rasmussen from Bitwise, whose sole ETF is on fire despite the market, and Jesse Eckel, who claims his portfolio is now 99% crypto, and we're going to hear all about it, as well as we're going to kick off with some hopium, why Bitcoin is actually in its silent IPO era and is due for much larger gains in the short term and long term. And we're going to look at the market and talk about when our bags might see some relief. If you're trying to keep up with these wild market swings, our daily newsletter also has you covered. Yesterday, we broke down why everything was moving so hard. And you don't want to miss the next one because our writer is doing a fantastic job of just staying right on top of everything that's happening. So check out the show notes for the link to our daily newsletter. Today's episode is brought to you by Bridge. Power your business with instant stablecoin payments, no friction, no banks, just global finance made simple. Gemini Credit Card, turn your everyday spending into Bitcoin, stack sats without even thinking about it, and figure markets. Earn solid returns on your cash because sitting idle isn't a strategy. Let's get the heavy hitters in here. Gentlemen, welcome back to the show for all of you. We have a lot to cover today, so we're just going to skip the pleasantries and dive right in. Matt, you pointed out in your weekly memo that this fantastic essay from Jordie Visser explaining why Bitcoin is in its silent IPO phase was something to really pay attention to. Can you break that down for us? Explain that idea to us in layman's terms for those who maybe haven't read it or just trying to look for a little bit of a glimmer of hope on a week like today, a week like this one.
It's more than a glimmer of hope, LG. I know the market's down. I know it's challenged, but it paints a very strong long-term picture. Look, Jordie is one of the best macro thinkers that I know. I read everything that I write. He writes publicly, so I encourage people to Google him and find his writing. The point of this piece was to explain the big paradox that's been weighing on people's minds, which is why is the price of Bitcoin relatively flat despite all the good news, despite positive regulatory news, despite ETF launching, despite institutional adoption, sovereign wealth funds buying? Why has it just been frustratingly ticking sideways? And what Jordie does is draw on his background in traditional finance to make an analogy to IPOs. And usually when you see a big tech stock IPO, the stock tends to trade flat for a relatively long period of time. Facebook IPO'd at $38 in 2012, and it traded down or flat for 15 months. The same thing is true of Amazon, of Google, of other major tech giants. The reason, Visser explains, is that it's going through a distribution phase where the early adopters, the early investors, the founders of the business are selling some of their stake in the business to institutional investors. And it's only after that process is completed that you see the stock go up. To tell the end of the Facebook story, it's trading at $650 today. So 38 to 650, but it went down for 15 months. The point Visser was making is the same thing is happening in Bitcoin. Bitcoin has reached a level of maturity where there's now an ETF, where it's owned by the Harvard Endowment, where it's owned by the Luxembourg Sovereign Wealth Fund, where it's accepted by institutions. And he was knowing that some of the OGs have been selling some of their Bitcoin as it makes this transition into a post-IPO era. The reason it's bullish is that once you get through this sideways chop, what happens to these high quality tech assets is that they appreciate significantly, right? Amazon up 100,000%, Google up a lot, Facebook up a lot. Bitcoin, in my view, will be up a lot. If you have that framing, this sideways chop turns from an annoyance to a gift. A gift because it gives you the chance to upsize your allocations. You mentioned Jesse's at 99%. Maybe there's room for him to get to 100. I think there's still space and time. So that was what Visser was pointing out. And it just rung so true with me that I had to point it out. I think it's probably the best analysis of what's going on in the market right now.
That is, Jesse, I don't know what your last 1% is, but I want to hear what that is. We're gonna come back to that, what your 1% left is that is not 99%. That's not the other one. Matt, I'm just going to dive into that a little bit. One of the big price suppressors here is the OG selling. I think a lot of people are looking at that as bearish, and like you're saying, right? It's very similar to IPOs where you have early investors, but I think for a lot of people, like Bitcoin OGs are probably a bit of a different class because they're a little lesser known. There's no, maybe a lot of them are not these classic Silicon Valley VCs who have a very clear game plan for their investments. What kind of reassurance can you provide people who are looking at the OG selling as something that's quite bearish?
Well, I think you should just accept that it's normal. I mean, those of us who've been around startups, even extraordinarily successful startups, and I've had the fortunate, run to do that in various parts of my life. You see founders participating in secondaries. They're people too. They have jobs, they have families, they have college tuition, they have houses to pay. Just because you're seeing some selling from OGs does not mean that they don't believe that Bitcoin is still on this trajectory to be a globally important asset. It's just that they made a wild bet, right? Bitcoin at $1 was a wild and crazy bet, and they got it right. They have generational wealth and they're diversifying. There are a few loud OGs who are saying Bitcoin has lost its way. It's become all BlackRock. But I think that's really the minority. The major investors that we talk to, we know some who are diversifying their exposure, but they're just doing that. They're diversifying their exposure, right? Mark Zuckerberg has sold shares of Facebook. He's still very bullish on the stock. And I think that's what's going on here. So give them their flowers, let them diversify, be happy for them, and know that we are at Facebook at $38, right? That is where we are at. Facebook is up 1,500% since then. There's that kind of return left for Bitcoin. And the other thing I think people should realize is that post-IPO, these startups are much less volatile, much less risky. That's the other side of this story, is Bitcoin is less risky today than it was 5 or 10 years ago. Still has big upside, but less risk. That changes how you invest, but it doesn't mean invest less. It actually means invest more to capture that significant upside.
Matt, how does a piece like this from Jordie Visser affect price? Because this thing is viral. I feel like every investor from super institutional down to retail has read it or is getting exposure to it, even like we're doing right now on the show, right? A lot of people probably haven't read it and they probably don't need to after hearing you explain it. Does this kind of permeate itself into the culture of the price action, where a lot of people who have deep pockets, who are ready to buy, maybe a little scared by this OG narrative, are now catching wind of this new idea that it's a silent IPO and it's reinforcing their positivity? Is something like this, is crypto enough of an echo chamber that it has that much of an impact? Or is this just a news piece just pointing out what has already happened?
No, I actually think it does. I think it has two different effects, though. One is that short-term retail-oriented traders see it and despair. They're like, oh, the OGs are selling out. They don't read further into the piece to think what happens in the next 6 or 12 months. I actually think it was part of the reason we wicked down so hard at the early part of the week. Certainly the hacks didn't help. The problems in vaults didn't help. But I do think this like short-term view of this essay contributed to that. But I think eventually the market fades that view and recognizes what I said earlier, which is if you accept that this is what's happening, and I do think it's what's happening, this sideways chop is not a setback, it's a gift, right? And I think that's maybe why you started to see some bounce around $100,000. I think over time, more and more people are going to realize, hey, Jordie is right. We're going through this IPO consolidation distribution phase. And boy, do I want to own a lot of Bitcoin at the end of that, because then we're going to see that price suppression removed. And I think the asset move up substantially from there. At least that's my take. And I think over time, more and more people will understand that that is really the point of the essay, that it's a bullish essay for people who are invested for more than the next month.
I want to send to the other guys here and get their takes on this. Jesse, from your side, you read that article. Do you agree? Because you're very much like, you're both in like seeing the larger flows and also in the trenches. Do you agree with this take that's where Bitcoin's at?
So I actually haven't read that article. That was the first time I've heard that take.
Well, it's pretty accurate. What Matt said is pretty accurate to what it is.
No, that's a really interesting perspective and take. And it doesn't sound wrong. It's not like, I would agree with that. I would say some of the current price action, though, maybe to color in some of the other part of the picture, comes from a couple other things as well. One of those things being the fact that in August and September, we had that huge TGA rebuild. And so the RRP basically ran down going into September. And that's where we saw a lot of that kind of like market liquidity weakness. And then if you go into early October, we had an uptick in issuance from the Treasury. And so that made the liquidity environment even weaker. And then going from that, we had the government shutdown, which kind of further exacerbated as well. So I think it's more, I think alongside with that, you have a really clear story of like weak liquidity in the market. And so Bitcoin and crypto as a whole is really reflexive to liquidity. And you see a lot of these charts where a lot of these people post on X where it's like the total liquidity and like Bitcoin price and how it's like out of sync or whatever. And everyone's like, oh, why is it out of sync? This makes no sense. But really it's a market plumbing issue. The liquidity is technically there. Like for example, with the government shutdown, the liquidity is technically there. It's just piling up at the TGA. And so right now with the weaker liquidity environment, Bitcoin is typically the first to react to that. But now you're also seeing stocks and the rest of the market react to that. But the good news is like a step up in issuance from early October, market plumbing eventually expands to kind of like be able to handle that. The TGA rebuild is done. And when the government shutdown ends, there's a lot of back pay and other things that ends up going out, and those liquidity flows end up going back into the market. And I think a lot of people underestimate just how much of the like global liquidity is driven by government spending at this point because we have so much debt. And so I think all those things coupled together with the fact that we had this huge liquidation event in October. And what ended up happening is going into October, a lot of the OGs were saying, hey, 4-year cycle, we're going to have this parabolic move up into the end of the year. And they were net buyers. After that liquidation event, that flipped that huge group of OGs from saying, hey, oh my gosh, parabolic run up to, oh, this is the end of the cycle. And so you saw a huge, those flip from buyers to sellers into this weak liquidity environment, which a lot of people attribute it to the headline event with Trump and China and all that kind of stuff. I really think it could have been any headline event that would have broke the market just because it was pretty weak to begin with. And so really what I think right now is it's a story of 4-year cycle believers kind of rotating out, a weak liquidity environment and waiting for that government shutdown to end and some of that selling pressure to, and maybe that kind of goes into that IPO phase, some of that selling pressure to subside. And I think once we get to a point where in crypto, we kind of bury the 4-year cycle and people are like, okay, hey, this isn't a thing anymore. People kind of start to imagine and believe again that anything's possible. And especially going into 2026, I believe we're going to see a pretty decent liquidity wave. That's when things start to pick up again.
Okay, I've got a few questions for you on the top of that, but since it's so topical and we're talking about government shutdown, let's open. This is a chance to open PolyMarket, and let's just see that the odds of but this is. I've always said that PolyMarket is like a pre-news app, and the odds of the shutdown ending sooner than later, like in the next 2 weeks, have started to skyrocket, and the odds of it happening after November 16th are down 11% today. So now we actually have. November 16th plus is still the highest, yes, at 40%. But November 8th to 11th is today at 34%, and November 12th to 15th is now at 21%. So that's starting to change a little bit. Gentlemen, this is an open question for anybody. And Ryan, I mean, we haven't heard from you yet, so maybe you can speak to this one. When the government does reopen, or at least they say they'll reopen, as we're starting to see now, it's a bit of positive news. What effects is that going to have on the market?
Well, yeah, I think Jesse's right about the fact that the liquidity's environment is unique right now for a number of reasons. And I think the government shutdown is playing a role, not only in that, but the way investors are thinking about the markets and where we're headed. So I do think the government reopening just instills some level of confidence that things are going back to normal and we'll have less uncertainty, which investors hate uncertainty. That's been true for decades and centuries. And so I think once the government does reopen, not only will it have some more confidence in markets in general due to that less uncertainty, but I know in the crypto world, for instance, there's a lot of things that have been stalled out, a lot of catalysts that have been stalled out with the government shutdown. You have major pieces of legislation like the Clarity Act, which was moving its way towards the finish line and then just was stopped in its track with this government shutdown. And then you have the end of the year coming, the midterms next year. So there's a lot of uncertainty around if or when that gets passed. We believe it'll get passed, and that'll be a huge long-term tailwind for the market. But right now, a lot of investors just don't know. Same thing goes for ETP approvals, for instance, right? There's generic listing standards and all of this positive momentum from the SEC around project crypto and stablecoins and tokenization, all this great stuff. Then the government shuts down and we're just stopped in our tracks again. So I do think whether it's liquidity or other catalysts around product launches or regulatory clarity or whatever it is, the government shutdown's playing a bigger role than most people think, because most people's day-to-day life hasn't changed. I can still go to the airport and go through TSA. I can still go vote. I still have to pay my property taxes by the deadline. But there are a number of kind of under the surface impacts that the government shutdown has on market liquidity, on market structure, on product, on regulatory, clarity for crypto that is certainly having an impact. And I think all of this uncertainty or stalling out leads to some fatigue, which leads to choppiness, which leads to continued bearishness of, oh, it's all over. We've had that final run up. And that's what I think investors are kind of squaring off with amid other concerns around things like AI revenues and employment claims and what's going to happen with rate cuts. There's just so much uncertainty. So the government shutdown brings some calmness to the markets that I think is needed and kind of relights the fire that we've had fueling markets so far through the first 9 months of the year.
What's something, Ryan? Go ahead, Matt.
I was just going to build on that and tie it to Jesse's point. The government shutdown also sucks liquidity out of the market. And I think when it reopens, that liquidity will refill both on a government level and on an individual level. They're going to get paychecks for multiple months. And I'm bullish on the government reopening. The Republicans just suffered an election setback in the US, sort of put on notice that the people are not happy across New York, Virginia, and other areas. And I think that's going to force them to the table. So, I love to speculate verbally on PolyMarket. Obviously, we can't access it here in the US. But I think I'd be on the inside of it opening sooner rather than later. And I do think that liquidity refill will maybe catalyze us into a recovery in crypto.
So yeah, I should have pulled up the Kalshi bet for that one. And I think has also changed. It has also changed that they're reflecting each other. So it has changed quite a bit. I'd actually really like to, I have a lot more questions about kind of investor perceptions of this market, because I think crypto's turned into something highly emotional. But I do just want to do justice to what you guys were explaining, especially Jesse. You were talking about the TGA. I think one point that maybe you missed is can you give us like the basic layman's terms of like what the TGA is and its role in kind of accumulating this like $1 trillion bankroll, and like just how that works for people that don't really fully understand that? Because I think a lot of people listen to the podcast and people that are still learning a lot about finance, like myself. There's a lot of all these factors that you have to kind of understand how they balance each other, and that's something that I wasn't particularly aware of until even our macro writer at Milk Road. He wrote a nice Thomas. He wrote a nice big thread on the other day as well. Please, before we continue, Jesse, break down for us what is the TGA and how did it accumulate so much money?
Okay, yeah, the TGA is kind of like the government's piggy bank. So it's just like a big savings account, sort of. And they went through a major rebuild in August and September. And so they wanted to get, I think it was 850 billion. Initially, that came out of the RRP, which is basically liquidity neutral. So it's not impacting the markets. But around the start of September, that started coming out of bank reserves, which is negative in terms of liquidity. And so maybe an easy way to understand it is if you look at that, as I mentioned earlier, that chart that a lot of people show on X, where it's like, here's global M2, here's Bitcoin's price, and everyone's like, why did it break? It doesn't make any sense. But it actually makes total sense, because the TGA rebuild, the liquidity is there. Like, it's coming into the global market, I guess, not the market, but the global finance system. But it all went into the TGA. And so that's not going to impact markets in any meaningful way until you have some sort of TGA drawdown for some reason. And so it's just a big piggy bank for the government. And then right now, with the government being shut down, you're seeing funds accumulate there that'll eventually get dispersed once the government shutdown ends.
Yep. An analogy that maybe is helpful for people is a little bit like the Strategic Petroleum Reserve, except for dollars. and money comes in and money comes out, and that influences sort of overall price action in the economy.
Stablecoins are the biggest use case in crypto right now, but let's be real, using them on chain is still way too complex. That's exactly the problem Bridge is solving. Recently acquired by Stripe, yep, that's Stripe, Bridge helps businesses send, store, accept, and launch stablecoins instantly. Explore the future of global financial infrastructure at milkroad.com/bridge. Did you know you can earn Bitcoin without ever buying it? That's where the Gemini Credit Card comes in. Here's how it works. Earn up to 4% back in Bitcoin on gas, transit, and rideshare, 3% on dining, 2% on groceries, and 1% on everything else. Use it just like any other credit card. And you're building a crypto portfolio at the same time. The best part, the Gemini Credit Card has no annual fee and works anywhere MasterCard is accepted. When you're approved and spend $3,000 in the first 90 days, you'll get a $200 Bitcoin bonus. Spend as usual, earn Bitcoin instead at milkroad.com/Gemini.
Great. Thank you for explaining that, gentlemen. I want to jump back to Ryan for a second, which is a question I had previewed. Out of everything you had explained before, what's something that I think a lot of investors still don't really understand about what's happening right now?
That's a great question. I think there's different camps of investors. There's retail investors, institutional investors, of course. I think that both of these investor classes don't understand two things fundamentally, or are mispricing two fundamental things about the crypto market. One we've kind of spoken about, and that's this demand versus supply dynamic of Bitcoin, Ethereum, and other crypto assets. I think most people, you look at the stats and you hear these wild stats about the Bitcoin ETFs being the most successful ETF launches of all time, Ethereum ETFs having wild inflows over the summers, corporations buying both of these crypto assets, Solana ETF having wild inflows over its week one and being the most successful launch in terms of volume in week one. You hear these stats, you're like, great, price should just be through the roof, because if there's so much excitement and demand on the buy side of the equation, then why isn't the price tripling, quadrupling, quintupling, or higher than that? And I think a lot of people are misunderstanding the short-term versus long-term supply and demand dynamics of these crypto assets. I was looking at some data this morning around this, and I think it's interesting to me that if you look at the price of Bitcoin for this year, it's up something like 10%. But if you look at the amount of demand versus supply of Bitcoin this year in terms of what the ETFs and corporations have purchased, which is something like 5 times the demand of new supply coming into the market, you would think that the price of Bitcoin should be much higher than 10%. I think that speaks to what we spoke about earlier, which there's this other dynamic of Bitcoin changing hands that is not just new issuance coming from the Bitcoin network. I think we will churn through that eventually, is what investors aren't understanding. They are impatient in general, or look mostly at price action. And when you look underneath the surface, this is long-term sustained demand that will continue once we churn through those OGs selling, or those short-term holders, taking losses, which is at an all-time high right now if you look at those metrics. So I think most investors, retail or institutional, just don't understand that there is a long-term structural imbalance of demand being much larger than supply that will impact prices over the long term once we churn through this short-term choppiness. That's the first thing. The other thing is that I don't think investors understand how much the regulatory developments over the past 12 months are going to impact crypto markets over the next 12 years. It is a flywheel that is continuing to accelerate, whether it's things like rescinding SOB 121, or the DOL, getting the green light on crypto and 401k plans, or dropping all of the lawsuits against the largest crypto companies, or any one of the probably 20 insane regulatory catalysts and developments that we've had over the past 12 months. Those compound on each other. And then you get things like the Genius Act, and we're seeing what that's doing to stablecoin AUM and transaction volume and investment. We're seeing what's happening with tokenization, with Project Crypto. Once we have the Clarity Act in place, that is going to accelerate the fuel on that flywheel, even though that analogy just broke. And we're going to see, a big climb in the crypto activity, investment, market cap, all of those things. And I think that's what investors are not understanding. Liquidity dynamics short term are choppy, long term are slanted, extremely bullish. The regulatory environment has changed so significantly over the past 12 months that people have become desensitized to how big of a deal it actually is over the next decade.
So does that mean then, gentlemen, that actually I have a different question. With what you just said, Ryan, this short-term price action, has that removed any players from the market? Because it's clear that a lot of potential market makers got this current phase of the market wrong. We've heard rumors that some people may have been blown up. And this is an open question for anybody who wants to jump in. Is there any truth to that? And how does that affect price action, I guess, in the short term?
Maybe I'll talk to like the institutional investors that we speak to, and then would love to hear Jesse and Matt jump in. When you had the flash crash in October, the institutional investors that we speak to didn't even know it happened for the most part. Like they were already, at their dinner reservations Friday night when markets crashed, and by the time they recovered on Monday, they were just logging back into their computer, and the price had barely moved of the ETFs they purchased or what have you. And so they didn't really feel this. They didn't really pay attention to it because it impacted this weird area of the market that they just don't participate in, which is perpetuals and derivatives and DeFi and leveraged trading. So institutional investors didn't really feel that. They see the price action right now, and I know a lot of investors we're talking to, Matt alluded to this, like it is being viewed as a buying opportunity. You have Bitcoin retracing back to 10% above where it was at the beginning of the year, and they've missed this run all year, and their clients have been asking them about that, and they become more comfortable with Bitcoin, with Ethereum. Now they can access Solana. Perhaps they want to get into there. So they're viewing this as an opportunity to rebalance their portfolio heading into end of year reviews. They can show clients, yes, we own Bitcoin. Yes, we own Ethereum. Yes, you own Solana. And so they can be positioned for 2026 if they have a positive outlook for crypto, which most of the institutional investors we speak to, of course, there's some like bias there because they're talking to us about crypto, but they're interested in crypto and believe there's a long-term positive trajectory for crypto. So buying opportunity is what we're hearing when we talk to institutional investors.
Yeah, I think
that's I just want to say that's a nice life. I wish I could log off on Friday and just not look at the charts at all until Monday. That's right. That's ideal.
It is a beautiful thing. It's worth noting that all 20 of the 20 largest assets are up positively on a 1-year basis. And that's the timeline that institutions play on. So there is no bear market. The majority of large cap assets are up on a year-to-date basis. Bitcoin is up on a year-to-date basis. Ethereum is up on a year-to-date basis. There's to answer your question directly, LG, I don't think anyone has been carried out from an institutional perspective. There were certainly market makers that took it on the chin in that $20 billion liquidation and saw significant issues, but we haven't seen any major bodies float to the surface. I think what's floated to the surface over the last 3 years has been retail traders. It's just been a terrible, terrible stretch. They got kicked in the shins by FTX. They got kicked in the shins by an alt season that never emerged. They got kicked in the shins by the meme coin bust. They got kicked in the shins with this deleveraging. And now they're starting to get kicked in the shins by from the DeFi looping trade unwinding. It's just been a brutal series. Every time they pop their head out, they get smacked. And I think that's really what's missing from the market. My own view is that retail sentiment can't get much worse. I actually think we might have completed the 4-year cycle, but all 4 years. We might have already done the bear market part of the 4-year cycle too, and we're ready for the next bull market, because I can't imagine retail sentiment getting much worse, and institutional sentiment is going to be going up and to the right for the next 5 years. So, but I do think that's the bodies that have floated to the surface.
Jesse, you're making videos almost every day, tons of views. You've got like 250,000 YouTube subscribers. I feel like you are directly connected to retail or would-be retailers or former retail participants in the market. How is your community viewing the market these days? What kind of content do they react to? Are they still liquid? What's going on with the people?
Okay, so I would say when you say retail, I kind of think of it in two different baskets. There's like crypto native retail, which are the people that have stuck around. And then there's like the retail that was around in 2021. I would say for the most part, the retail that was around in 2021 still isn't really doing much with crypto. I've probably talked, I don't even know how many people I've talked to in person. When I go walk around, people are like, oh, you're in crypto. They're mostly out of the market. And the only asset that they hold is XRP. Randomly, out of probably 1,000 people I'll talk to, always. Retail is like, that's the only thing they hold. Always. And anyway, my point is they're not really caught up on what's happening and all that kind of stuff. The people that are in the market are kind of down in the dumps right now because they did have that expectation that we'd have this parabolic run up, in Q4 of this year, because that's what is supposed to happen. But what I think a lot of people don't realize or are missing is that the typical 4-year cycle was a macro cycle. You can see that in two different places. You can see that, as many have pointed out, in the ISM, but also you can see that in huge bursts in year-over-year liquidity. A lot of people like to map to just like total M2, but that kind of just goes up and to the right always because it just always does. But where you can really see the cycles, if you pull up year-over-year M2, global money supply, you can literally see like 2013, 2017, and 2021 like on the chart. It's crazy. And we haven't had anything like that since 2021 because we've really been in a tightening cycle. Like we've had liquidity come into the market in various forms, but not in the momentum needed, because that's really what it is it's a momentum trade of when you have these huge injections of liquidity into the market. That's when you get that froth, which is typically when you get that alt season. And we haven't really had that. The biggest burst we've had is over this year, but the majority of that, or a huge portion of that, went into the TGA, like I said. So it's not translating directly into the market. So we're still waiting for that. And that's why I'm a big believer that like that alt season, all that kind of stuff, that's at some point ahead when you do have more of that frothy market environment from that excess liquidity getting spilled over from, maybe it's, I don't know what will cause it, but 2025 is or 2026 is a possible year given midterms. And I think Trump wants to win, and we're looking at maybe a tariff reversal. I don't know if you guys saw that, but on PolyMarket, the odds are that the Supreme Court actually shoots down the tariffs, and I don't know exactly what that means, how that plays out. But I think Trump wants to win, and I think there's without the tariffs, the Fed's maybe a little bit less cautious about inflation, and who knows what happens going into 2026.
I did my part, Jesse. I called my member of parliament, told them not to make any more tariff commercials. Actually, that's actually something that happened. The apparently the British Columbia had an anti-tariff ad that they are not airing to not piss anybody off, that they had it ready, but they decided not to after that happened in Ontario. Okay, gentlemen, I kind of want to wrap this up with something that, I really want to get into the habit of asking a lot of our guests is at this point in time, what do your portfolio allocations look like? Has that changed? Matt, you mentioned, I think at some point in your write-up, and also probably, kind of in reference to Jordie's, that perhaps the 1% Bitcoin, the era of Bitcoin, 1% Bitcoin allocations is ending. How much would you recommend to an investor coming into the market right now to have Bitcoin or any other cryptos in their portfolio?
Yeah, well, I mean, the reason it's ending, just to be clear, is that crypto is less volatile and less risky than it used to be. So we're not going to get 1,000x returns on Bitcoin. I think it could 10 or more x in the next handful of years, but it's not going to 1,000x. But it's also less risky. What you do with that in your portfolio is, instead of buying 1%, because you can't take that much risk, you buy 5%. And I think 5% is going to become the new norm. Our average investment amongst a client at Bitwise has moved up from something like 1% when we started in 2017 to something like 2.5% and 3%. And we now hear a lot of national accounts talking about up to 10%. So I think 5% is going to be the new 1%. My personal portfolio is dramatically overweight, not as much as Jesse, but is not quite majority crypto, but it's getting there. And I'm excited about this market. Again, I think we've de-risked crypto, but much of the upside remains. And when that happens, that means a higher allocation. You can stomach more volatility. That's what I'm doing in my account and what we're hearing from clients as well.
Jesse, what's that 1% of that isn't crypto yet in your portfolio?
Just cash in the bank. So I always hold some cash in the bank just for a rainy day. But yeah, I mean, just like Matt and Ryan, I'm really bullish going into the next few years on crypto from a regulatory standpoint, from a flows-based ETF standpoint of like exactly what they're saying with the IPO phase. Like one of the reasons Bitcoin's not as low as it probably should be, given how weak liquidity is those ETF flows are insane. And those are only going to continue to ramp up. And this is kind of a handoff from like 4-year cycle sellers are selling into the hands of institutions, not just institutions. A lot of those ETF flows are boomer retail. They're the ones buying those bags. But that's what makes me the most bullish is the fact that like the thing about like the really older generation is they hold the majority of the wealth. They will pass away. They're going to pass that wealth down to the younger generation. The younger generation is disillusioned by the current system. You just saw Mondami get elected in New York. I don't think they're going to be buying the same assets that people think they are. And I think they're going to be doing a huge allocation into crypto and just assets that don't make any sense because of that disillusionment. And so I think the future for crypto is insanely bright. And yeah, I'm just bullish on where it heads from here.
I would just add to that. I think that's exactly right. Like Matt and I spend so much time speaking with financial advisors and wealth managers. We're traveling almost every single week, having dozens of meetings per week with different wealth managers and financial advisors. And what we hear time and time again, particularly this year, what I've heard is a lot of that crypto is a part of every conversation that they're having. And it doesn't matter if they're speaking to a 60-year-old client or a 30-year-old client or anywhere in between. Crypto is a part of that conversation. Now that comes two ways. It could be inbound inquiries from the client asking about getting allocations to crypto. But more and more what it is the advisor saying, hey, we're going to get you some exposure to this emerging asset class because of the regulatory tailwinds, because it's become more institutional. That could be 1%, it could be 5%, it could be 10%, but you're going to have crypto exposure. We're going to maintain that as a core piece of your portfolio. And part of the reason they're doing that is for client retention. If they're getting requests from clients like, hey, you need to offer crypto to us or I'm going to go somewhere else, which actually is happening. I hear stories of that happening. I actually spoke recently with an advisor who said that they got a client solely because the client's previous advisor was not allowing them to invest in Bitcoin. And this client was like 60 years old. So it's actually happening. These aren't just kind of stories that we tell. These are boots on the ground conversations. I think that is a long-term trend, to Jesse's point, around where the next generation of investors are headed and the next generation of wealth managers. You forget that, a lot of these wealth managers retire and sell their books of business to younger wealth managers. And the reality is most of these younger wealth managers are at least comfortable with the idea of investing in Bitcoin or Ethereum or Solana or whatever the crypto asset is. And so I think that is a long-term tailwind that's fueled by trillions of dollars managed by wealth managers that will push the space higher over the next decade.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets.
Ryan, just to build on that point, can you tell us really quick about the Bitwise Soul ETF? I want to end there because you guys did on Monday, as things were dying, almost a record day, $65 million of inflows. A little slower yesterday, but still a net inflow. Tell us about the market's demand for Solana, because we haven't even talked about anything aside Bitcoin today. But a couple of rungs down the majors, Solana seeing some action for you guys.
Yeah, it's incredible. I think you hit the nail on the head there, where amid this big market sell-off and craziness happening in the market, we saw an incredible amount of flows into the Bitwise Solana ETP on Monday, and that extended the remarkable and of course we're happy with the amount of flows that we saw in week one. I think for context, to gauge where institutional investor sentiment is, there's been 850 ETF launches in the US this year. All different types of issuers. These are leveraged ETFs. These are alt ETFs. These are, whatever they are. And the Bitwise Solana ETP was the most successful launch in terms of volume across all 850 ETFs issued. And I think a lot of people assumed these things would flop. But the reality is investors are looking for exposure to emerging high growth assets, and crypto fits that profile very, very well. So we're really happy about the growth of Solana. Of course, this also includes staking, which is new for a day one launch of these ETPs, right? And that speaks to the regulatory regime shift that we've seen. And I think investors are really excited about that as well. And they just love ETFs. Like, investors love being able to open their brokerage account or use the platform where they manage their clients' money and just buy an ETF rather than having to like go through some, private placement fund that has high minimums and low liquidity, or buy some kind of trust that has a 2.5% management fee and trades at premiums and discounts. They just love ETFs. That's how they allocate to every other asset class. The fact that now Solana is available to investors in an ETF for a low fee with institutional grade custody, daily liquidity, intraday liquidity is really a beautiful thing for investors. And we're super excited with the success of the Bitwise Solana ETP in the current environment. And I think once, the fear and greed or the fear, turns to greed in the crypto market, we're going to see that thing skyrocket.
Awesome. Well, congrats, guys. That's big news. The last thing we have to do, now we're done talking crypto, is open up PolyMarket. To come back to Matt told us 2 weeks ago that the best bet in finance you can make between now and the end of the year is that Wicked for Good will be the highest grossing film of the year. When you said that, Matt, I believe it was at 40%, and now it's at 46%. So you could have already made like whatever that is, 8%, 10% on that bet if you had taken it. Yeah. We're at 46% so far. Movie's not even out yet. I just want to add to this that I do think Avatar is a sneaky one, even though it's coming out late in the year. It's something that I think at the holidays, people are like, listen, I'm going to take the kids to see the crazy like IMAX, costs $40 to wear the goggles, the seats move. People love that kind of stuff at the holidays. So and you never go short on James Cameron. Let's bring the outsider into this. Jesse, do you have any opinion whatsoever on the PolyMarket highest grossing film of 2025 market?
No, I've never even seen Wicked for one.
It's not out. It's not even out yet. It doesn't
is this the first one?
It's coming out Thanksgiving.
Oh, okay. Yeah, no. Yeah. I had no idea.
That's probably for the better.
I would note that if you annualize the return since we last met on that bet, it's like you're grossing 100% a year. So I've been right so far. I think it's a walk over Zootopia. I like the Avatar pick. That's good at 7%. That's worth a flyer. But I still think, this is an easy double in less than 2 months. Not investment advice, but I bet that the 1% of the portfolio is actually going to end up in here, and you're going to be very happy with that.
Just a totally irresponsible PolyMarket bet. That's what the extra 1% is. Yeah, that's
right.
Gentlemen, it's been a pleasure. Thank you so much for coming on the show. Folks, if you like this, make sure you tune in every day for Milk Road Daily Show and tune into our newsletter as well. That's covering this stuff day by day as it happens. Matt, Ryan, Jesse, we'll have you guys back all very soon. And good luck to all market participants as we go into a very bullish 2026.
Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.